Mike, overall, there was a beat here on the inventories. So does that have to come off as we come into the next couple of quarters?
Inventories and business investment, which was a bit of a splurge at the end of the year, probably going to be some give back in the first quarter. But, I mean, I think it tells you that things were not really falling apart at the end of last year, which, in fact, I think maybe if you're Jay Powell, you could say, you see, this is the reason I wasn't panicking in November, because things didn't look so bad. But there is probably some pull forward from the first quarter. The first quarter has seasonal tendencies to be kind of weaker than the models even suggest. And, of course, we had the shutdown. So I have a feeling that it's okay, great. We got 2.6%. We got about a 3% year in 2018. We're going to probably give a pass to the first quarter numbers just because of all the noisiness of them. And I see the bond market really didn't react dramatically to today's GDP number because it just doesn't seem like we can extrapolate directly from that momentum.
Not for nothing. Doesn't the market always give the first quarter a pass? There's always like weather. There's always something.
It's learned to. You're right. Yeah, absolutely. The last few years.
And to that point, Alicia, I guess going back to the comments you just made before, that you think that we could potentially see stronger growth than everybody's expecting.
That's right. And central banks worldwide are handcuffed. So we're not going to have any pushback from central banks, even the Fed. I think we don't see any movement, at least until September, until we see really what steady state growth is, because as you said, first quarter still has the shutdown impact. It has the sell-off of the market impact as investors got their statements that third week in January. So that will have some effect also. But I think you'll normalize by the summer. A
lot of foreign central banks, as you say, in handcuffs. We do talk often about the fact that the Fed does have flexibility if necessary. At this stage of the cycle, how real is that flexibility? If we were to cut rates, would it mean that we can definitely hit a high GDP number and it would automatically kick in more stimulus? I mean,
I don't see the Fed cutting rates this year at all. I actually could see the possibility of a hike if everything goes right. So that's a big if, but it could happen. And that's in particular if you start seeing growth here really revving up in the summer. But having said that, I think the Fed's going to be very patient. One of the greatest things we saw today was that inflation is simply not existent. So despite the fact that the consumer's been so strong, and you've seen on the earnings estimates that all these consumer discretionary companies have really done well, there simply is no inflation in the system. We're importing disinflation from all over the world.
Mike, we had a discussion in the last hour about fiscal stimulus and this idea that, that spending was maybe going to start to dry up, and whether it's a sugar high, et cetera. Yeah. One of the things that's not getting talked about, though, is the fact that you have had higher and higher levels of military spending. True. And I think the expectation this year is that that is going to continue. It's either going to increase or it's going to stay right about where it was. If you look at, one of the groups that actually outperformed today in the S&P, it was aerospace and defense. Should we be paying more attention to that?
Without a doubt. I mean, that even if we're talking about, the president proposing 5% discretionary spending cuts for every department except for defense, right? So yeah. I do think that is that's absolutely true. I don't think really we're bracing for anything approaching austerity. I think it's really more of a mathematical effect. We're basically saying, look, the best year-on-year impacts, the most direct ones, would have come last year in terms of just the radical cut in tax rates and that boost in spending after you had spending cap for a few years. So, I don't think the fiscal story is going to be a huge swing factor for whether we have a growth slowdown that's really pronounced this year or not.